Boom! What's up, Waves Capital? It's Royce Jacob, and welcome back to the channel. You guys, we have a big week ahead of us. The data we receive this week will likely determine whether we close out the month of January in the green or in the red. As you guys can see right here, I do think the S&P 500 or the SPY will see a plus or minus 12% move by February 1st. And of course, I will explain why I believe that a little later in the video. But first, we have to focus on the fundamentals. There are two key things happening later this week that pretty much every investor in the world will be eyeballing. The first of which, and arguably the most important of which, is going to be the inflation data that's coming out on Thursday and or the consumer price index report for the month of December. And second is big bank earnings. We'll go over the banks or institutions that are reporting on Friday. Okay, so again, we'll read over this, really establish our fundamental thoughts and opinion on the week ahead. And then we'll close it out by, once again, rationalizing why I think it's likely, it may sound crazy, but I think it is very possible that the SPY sees a plus or minus 12% move by the end of the month. Okay, so again, both of these two events occur later in the week, Thursday and Friday. So we may get a couple of days of volatility, but I'm not worried. As many of you know, Waves Capital thrives during periods of volatility. I'm actually really excited, and personally, I'm optimistic about what will go down this week. I do think that this data will favor the bulls personally, and of course, my money is where my mouth is. Before we get to reading, you guys, if you do want to trade along with me on a daily basis, if you want to know what my personal portfolio looks like and how I update it every single trading day, and also receive my daily newsletters where I rationalize my trades and give you guys my day-to-day real-time thoughts on the markets. That will be the first link in the description box down below, but more on that later. What I really want to touch on right now as we kick off the new year is our new Waves Capital affiliate program. So to read through this right off the bat, the affiliates commission will be 20%, which is a little higher than average. But I do want to read through this, just explain to you guys what it is because it's new for existing members, of course, of the portfolio. If you're not part of the portfolio, that's all right. You can skip forward a little bit. But I do think that this could be pretty advantageous for existing members and hopefully earn you guys some of the money you very well deserve in the case that you do want to share the product if you like it. So I quickly want to read through this, explain what the affiliate program is if you're not familiar, and then we'll dive into all this good stuff. Okay, but a little PSA first. So I'm sure most of you are familiar with the concept of being an affiliate, but if not, it pretty much just means that you'd receive a percentage of all income generated if someone uses your personal link to sign up for the portfolio and newsletter product. So first off, or just right off the bat, I will say that link is right down below as well, along with a portfolio link. Okay, so I don't expect you to sign up for this, and honestly, I'm not even asking you to, but if you do find value in the daily portfolio updates and newsletters, and if you feel comfortable recommending it to family and friends, then I figured it's only fair for you to receive some commission for sharing. So typical affiliate programs offer 5 to 10% commission, but I figured I would give Waves Capital a 20% commission rate to really make it worth your time. And I'd appreciate it if you give the program a shot, but if not, no worries at all. Let's have a great week, team. Cheers. Okay, so again, that link is going to be down below. This is a very, very simple form. You guys, I believe that any of you who sign up are pretty likely to be approved, and I will approve any of you guys if you're members of Waves Cap, of course. But that will be the first link down below. Again, if you feel the newsletter and portfolio product is worth sharing, then you deserve to, earn some commission off of that share. Okay, so I appreciate you guys checking that out. Again, I was excited to launch this. Been working on this for a while. So if you're interested in signing up, link down below once again. Let's get into this. Okay, so inflation data, big bank earnings. Major banks kick off the earnings season of the week ahead, but it may be news on inflation that drives markets after hopes for a slowing trend triggered a major stock rally on Friday. Quote, next week is all about inflation, said Michael Arone, chief investment strategist at State Street Global Advisors. I would expect another volatile week. It'll be interesting in that each data piece that comes in and suggests we're moving toward the Fed's 2% inflation goal will be celebrated. And for data that refutes that, markets will act negatively. So pretty much, if this data shows that inflation is cooling down, if the CPI print, now once again, December CPI print, what happened in December, which comes out on January 12th at 8:30 a.m. Eastern time. If this shows inflation cooling down, then I do think the January effect will kick into hyperdrive. I do think the markets will absolutely rip. But if the CPI print comes in hot, that is very, very negative, and we are likely to, see the red side of this coin flip, which again we'll dive into later. But that's inflation data that comes out on Thursday once again, and the first major day of the fourth quarter earnings season is Friday, when major banks, including JP Morgan Chase and Bank of America, report. What they have to say about earnings will also set the tone in terms of what the earnings season will look like, Jerome said. So once again, important inflation report in the week ahead is the CPI released Thursday, and a group of major financials include Wells Fargo, Citigroup, and BlackRock, which report results on Friday, along with, once again, where do we just read it? JP Morgan Chase and Bank of America. So the big banks, the big institutions, financial institutions, I should say, are reporting on Friday, and that will really set the tone for what happens in the weeks ahead. And again, I do think that's the data we receive from both the CPI reports and the big bank earnings will almost 100% dictate the week ahead, but really dictate the rest of the month, because there's only a couple of weeks in the month left after this week, okay? So speaking of the end of the month, let me rationalize these targets for you guys on the S&P 500. And then we'll close it out. We'll actually take a look at Bitcoin as well. And, I'll give you guys my thoughts on why I do think the January effect really will kick in, and really what I'm excited about. So we'll do that at the end as a little bonus, okay? But the S&P 500, let's zoom out and talk about this little potential head and shoulders pattern that is still possible. But personally, again, I'm an optimistic guy. I think this will fall in favor of the bulls given the technicals. And, what we're seeing on the RSI as well, what we're seeing in just kind of simple technical terms as well. So I do think a break of overall resistance is in the cards. Again, this resistance point dating back over a year now to January of 2022. Very, very significant resistance has been broken once, but has not closed daily above it. That is the signal of a macro reversal, at least in my eyes. You need a daily candle closure. Broken above, little bull trap right there, but again, immediately sold off following that rejection. Personally, I do think that this head and shoulders pattern is possible. Again, the technicals come very secondary to the CPI report that comes out. But if the CPI report on Thursday shows signs of inflation meaningfully cooling, I think that the S&P comes up. Again, as you can see, the short-term channel right here, this could have been a potential bear flag, which is this big move down followed by this kind of little ascending channel, creating the flag formation itself. We did break above that. Again, didn't close the daily, did technically break above this channel, though. That is slightly bullish. It's a move in the right direction. But if the CPI print does come off cool, it doesn't have to be freezing cold, but if it's cooler than the month prior, if it's cooler than the November CPI report, I do think the markets will come up. I do think that overall resistance will finally be broken. I do think a daily candle will close above overall resistance. And then that would constitute the S&P 500 being in a technical breakout. Many of you know this, but I will reiterate this now. The reason we look at the S&P 500 is because this is the benchmark index for the U.S. equity markets, okay? If the S&P 500 is doing well, that means it's pretty damn likely that every other stock is going to do well as well, okay? So, of course, I'm especially excited about small caps right now. Again, I'll talk about that after. But in the case that CPI is cold, I think overall resistance, macro resistance, this red line right here is broken. That would constitute a macro breakout and reversal of overall trend. And I do think that if we do close a daily candle above this line of resistance, it's a very significant line of resistance, we will see previous support right here. You can see support that was broken and has not yet been retested, the cyan line. I do think that this line of previous support will come into play as new resistance. And I do think that in the case that, once again, CPI is cold and that the SPY breaks above macro resistance, I think we see $435 by February 1st, or plus 12%. If CPI comes in hot, then this is almost inevitable, this result right here. Okay? If CPI comes in hot, and if the banks really, really like significantly disappoint, they don't have to do great because everyone's already expecting a slowdown, but they can't like really, really, shit the bed. But if they do heavily disappoint, and if CPI comes in hot, then the downside is likely. Okay, this head and shoulders pattern will likely play out. And I do think we will see a 12% move to the downside because I have so many there's so many long-term trend lines, both like just historical floors as well as long-term lines of resistance and support that come into play around here that all intersect around 340. Weirdly around the end of the month too. So this is very possible. I don't want to discount this as a possibility. And it really does kind of fall in line with the potential resolution of this head and shoulders pattern too, which is this previous low that we saw, when was that, back in October around 350 for the SPY. Okay, so this will probably come into play as a new floor, but in the case that CPI is hot, it's pretty inevitable to me that the SPY will ultimately see probably about 340, another wave to the downside by February 1st. Okay, so once again, we will see a big move up or big move down. And I do think that this will predominantly see this over the rest of the month. Like if CPI is hot, we'll see mostly red for the remainder of the month. If CPI is cool, we will see mostly green for the rest of the month. And again, I'm an optimist. I think the January effect will kick in. Let's read over this quickly and then we'll dive into Bitcoin and close it out. Okay, so our portfolio, it's on fire today, but what's making me even happier than these gains is the fact that small caps and growth stocks are significantly outperforming large caps. We know the January effect is especially relevant to small caps, and this is exactly what we've prepared the portfolio for. As you know, I didn't make a single trade today, but in my mind, that's the point. So I think this was Thursday's newsletter. Establish a base macro thesis, construct the strongest portfolio possible based upon that thesis, and grab the popcorn and wait for your upside price targets to be achieved. And as you guys know, if you saw how Friday played out, the markets, the S&P and NASDAQ up almost 3% on Friday. It was a great day. We were ready for it. We were eating good on Friday. Really headed into this weekend with our chins high. And again, I'm excited for the week ahead. So have some massive winners in the portfolio. I'm really excited for what's ahead. And I do think the January effect will kick into high gear. So once again, if you guys do want to trade with me on a daily basis, that is my complete portfolio and daily newsletter product. Again, complete breakdown of my entire portfolio, all of my options, all of my stocks, all of my cryptocurrency positions, updated every trading day during market hours. And then after I update the portfolio and send out the trade alert newsletter, I also send out a macro analysis newsletter and a price targets newsletter, okay, where we cover the fundamentals and technicals on some of our key plays. That will be $15 a month, $40 for every 3 months, 7-day free trial. You can always cancel if you want to, but I do trust you guys will be sticking around if you give it a shot, and I look forward to seeing you on the inside. But if not, no worries at all. Let's close it out with BTC on the chart. So Bitcoin, good right now. Slow on render, also outperforming the pack too, which you love to see. So Bitcoin, I do think, it's difficult to dispute that Bitcoin looks pretty bullish right now. So Bitcoin is, of course, in like a shorter term ascending channel. You could say it's starting. I'll say that's the conservative channel right there. I never like counting like singular wicks like this one right here, but using 4-hour candles, you can see that Bitcoin is in a very nice organic, pretty textbook ascending channel right now. And it's also looking like it's trying to print this little inverse head and shoulders pattern within the greater head and shoulders pattern that I do ultimately think will play out over the next few months. I'm not going to talk about that now. I will just focus on the short term now because this is what's relevant for January. But in the shorter term, you guys, once again, the price action of Bitcoin is highly correlated to that of the U.S. equity markets. So the S&P 500, the NASDAQ 100, the CPI print will heavily affect Bitcoin as well, of course. So if the CPI comes in cool, I think it's almost inevitable that Bitcoin plays out this, kind of a janky inverse head and shoulders pattern, but nonetheless, an ascending channel with a janky inverse head and shoulders pattern leads me to believe that this will resolve as such. And in the case that we do see CPI cool on Thursday, I think we see an $18,000 Bitcoin by the weekend. Let's grab a quick price range on that from current levels at 16.96. That'll take us up, about 6-7%. And honestly, if we really get a cold CPI print, if the markets rip, I do think that we can get rid of that guy for now. I do think that this inverse head and shoulders pattern does have the potential to play itself out. My first target being, the neckline right here. I do think Bitcoin will form the neckline. Probably go sideways for a while until we get some more good news, maybe in the spring. But I do think Bitcoin can reclaim the $20,000 region, at some point during February at least, in the case that we get a cold CPI print. And I really am excited, of course, to see what happens with some of our favorite plays like Riot and other crypto-related stocks, and Solana and Render as well, because both of those right now looking pretty good. That's the video, you guys. I hope you enjoyed it. Again, Thursday inflation data, Friday the big banks kick off Q1 earnings season. Stay on your toes, stay sharp, and always remember, take action and make waves. I'll see you guys in the comments down below. Until next time, always remember, once again, take action, make waves. Peace, guys. I'll see you soon.